Welcome investors. You are watching Daily Forex News YouTube channel. Let's start. Greenback gains ground, ECB holds, dollar hits highs. ECB kept rates on hold, dashing hopes for a near-term cut. Lagarde's Davos quip about a summer/still lingers, but for now, data dependence reigns supreme. Across the pond, the US economy served up a mixed appetizer. GDP surprised to the upside, proving its winter coat was thicker than expected. Durable goods got a shiny coat of upward revision, too. But the job market threw a wrench in the party, with jobless claims rising, a potential hangover from holiday cheer. US dollar index technical analysis. US dollar index, DXY. It's stuck in a tug-of-war between two key moving averages, creating a nail-biting waiting game. Let's unpack the drama. The moving average maelstrom, the 55-day SMA, acting as the DXY's floor, is sinking like a sandcastle in the tide. This opens up more room for the greenback to fall in the short term. But wait, there's another player. The 200-day SMA, the mighty ceiling, stands firm at 103.50, potentially limiting any immediate upward breakouts. Data dice roll, hold on to your hats, because Thursday's data dump could be the game changer. If the numbers disappoint, or the ECB stumbles in its communication, the DXY might just smash through those moving averages like a wrecking ball. Upside Odyssey. If the bulls charge, the first hurdle to clear is the 100-day SMA at 104.41. Beyond that, the sky's the limit. 105.88 and even 107.20, the September peak, could be within reach. Downward spiral, but don't underestimate the bears. That sinking 55-day SMA could trigger a sell-off. If US data throws cold water on the economy, the DXY could tumble to 102.60, the September uptrend line. Breaching that would open the door for a plunge towards 102.00. Eurozone's money maestro, meet the European Central Bank. The European Central Bank, ECB, the big kahuna for all things monetary in this economic powerhouse. Think the Federal Reserve for Europe, but with a fancy accent and an extra dollop of complexity. Here's the lowdown. Eurozone's gatekeeper, the ECB makes sure prices in the Eurozone stay stable, aiming for a cool 2% inflation rate. Think Goldilocks, but instead of porridge, it's price hikes. Too hot, too cold ain't not good. Interest rate juggler, their main tool? Interest rates. Higher rates cool things down, making loans slightly more expensive and slowing down borrowing and spending. Lower rates. Think of it as a financial happy hour, encouraging borrowing and boosting the economy. 8 meetings, big decisions. The ECB Governing Council, a fancy group of Eurozone bank chiefs and ECB top brass led by President Christine Lagarde, meets 8 times a year to decide on these rates. Think of it as a financial summit with major economic consequences. So, there you have it. The ECB, the invisible hand guiding the Eurozone's financial destiny. Stay tuned to Daily Forex News as we keep you posted on their decisions and their impact on your wallet.